Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
Good morning, Dodge. Now, Thursday will most definitely be the Fed's most watched meeting, at least in the past couple of years. What's your current sense of the Fed moving to tighten at this meeting?
Good morning, Melissa. It's a supportable case, either side. The decision is not open and shut right now. The feeling is that they should make the move, but they won't for reasons not directly related to the U.S. economy, but what's happening in the world. Emerging markets are particularly exposed to the unwinding of financial exposure that's been developing since 2008. There could be flights of capital and steep currency devaluations, and the U.S. doesn't want to be the reason for that. Also, you have Iraq, who's planning to raise up to $6 billion in various bond issues, and they'll bear the brunt and the shift in sentiment away from emerging markets if the Fed decides to raise rates. So, yes, it should raise in terms of keeping the U.S. economy strong, which would be good for the world economy growth and return back to normalcy. But there are certain international tensions right now that the U.S. would not like to increase, and so therefore the decision is more likely not to. But it's so close, Melissa, that it's very hard to come to grips until we get to the actual decision.
Okay, so you're saying that the Fed should raise rates because domestically the U.S. is strong. But for me, it seems that there's a mixed bag of U.S. data. I mean, you look at car sales, commercial real estate, unemployment. They all offer statistical ammunition to tighten, but yet inflation and wages remain sluggish. So, Dodge, can you really say that the U.S. economy is strong?
You are absolutely correct. I agree totally with everything you said. The U.S. The growth has been strong, and unemployment has consistently fallen. The proportion of adults, so this is really a change now, the proportion of adults who are participating in the labor market, either working or looking for work, has fallen to its lowest level in nearly 4 decades. So a large number of Americans are leaving the labor force altogether. That implies that inflation could kick off at a lower rate of employment. However, until you actually see wage growth starting, there really is no fear of inflation. Wage growth, in fact, has been picking up only mildly and recently slipped back. The rise in compensation for the second quarter was the slowest since 1982. So, yes, you have a point. And no, it's not convincing, but the trend is right, and relative to the rest of the world, we do appear to be stronger, but it is not across the board, and that's what's creating the conundrum.
Dodge, on the international factors you mentioned earlier, you didn't quite mention China. Do you think that China's slowdown will be a key worry for the Fed?
Well, the recent hurried movement by China to allow the renminbi to weaken has raised fears both of general weakening in global demand and the quality of leadership in the world's second biggest economy. China's slowing itself is not a big surprise. Authorities are trying to rebalance the economy away from investment and exports to a more consumer-led model. Recent data has led to doubts about whether China can actually achieve it. So, yes, there are some concerns. Counterintuitively, a chorus of emerging market policymakers, but not including China, has said it might be better for the Fed to get on and raise rates rather than continue the destabilizing uncertainty. So it's not clear how much of a concern China should be for the U.S., but it is more of a global concern. We need to have more than just one or two nations growing. We're not having that now. So from that perspective, yes, it is a worry.
So when you say it's a global concern, do you think that a global slowdown is very much a reality now, as some pundits are suggesting?
I hesitate to say it is a certainty. It is a possibility. And as one gets further into the counterbalancing of the U.S. raising rates with the rest of the world, when the world starts moving in sync and starts to grow again, I think it will be less of a worry. But right now, it is a concern, and we're seeing it in very, very specific, very small pockets already. Germany, Europe's biggest economy, is reliant on exports and has been a particular beneficiary of Chinese sustained boom. Yet, having expanded 11% in 2014, it now exports its exports for the first 5 months to China increased by only 1.4%. You see Brazil's downgrade to junk status by Standard & Poor's. That opens the prospect of a wave of further downgrades. So there are very specific, limited possibilities now that could grow with the passage of time. It's not too late for the economic attendant circumstances to change the perspective and to reduce that probability to a minor possibility. But yes, it is a question that's now being asked more constantly.
So Dodge, this is going to be a big week, no doubt. How would you advise investors to approach this week?
Yes, investors. In other words, those who are not looking for the short-term shifts. Well, short-term market is we're trying to mount a near-term event. So for long-term investors, one might consider buying for longer term. But the advance that we're seeing now is being based on jamming shorts, not longer-term investment conviction. So I suspect that if there's no decision made, we will continue to have a run to the upside. But it's not, I would be selling into that strength and waiting for the next pullback. We really need to test further weakness and to come to conviction about what U.S. rates are going to do and the improvement throughout the world. Rallies so far have been a case of less than meets the eye. If the Fed doesn't raise rates, then yes, one can take advantage of the rally, but not investors. Shorter term, more trading oriented. But in terms of longer term, I think it's hard to buy into a growth story given the attendant circumstances of where we are now. So from an investment point of view, we're watching. We're not, from a trading point of view, we are taking advantage of the swings up through the decision. And then after the decision, we suspect that there'll be a move to the upside, assuming that interest rates are held right now, but that will be another selling opportunity.
Dodge, thanks so much for your time. That was Dodge Dorland, Chairman and Chief Investment Officer of Lendor Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, one subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6, ends 8/25/12.